Most of you, when it comes to analyzing charts, you don't know how to do it. So in this video, I'm going to be explaining fundamental and basic concepts that you need to fully understand if you want to analyze any charts. And the charts and the currency pair that I'm going to be using is called what? EURCAD. Now, before you start your analysis, what you need to do first is what they call top-down analysis. What is top-down analysis? It means that before making an entry, start from the higher time frame to see what is going on, then come down to a lower time frame to see how the higher time frame is influencing or affecting the lower time frame. Because when the higher time frame says buy, the lower time frame says sell. That means there's a challenge, there's a confusion. But when the higher time frame says buy and the lower time frame says buy, there's an agreement. So that agreement is what matters a lot. So top-down analysis means checking what is happening from the higher time frame to be sure that it agrees with what is happening on the lower time frame. So now, let's begin on the weekly time frame. The first thing to do is to know our trend from the higher time frame. So how do we know our trend? We know our trend by first of all drawing our trend line. So I'm drawing this trend line from what time frame? From the higher time frame, which is what? The weekly time frame. Usually my entry time frame is usually 4-hour time frame. But my analysis starts from what? The 1 week time frame. So before I enter on that 1 hour time frame, I need to come up, zoom out to what? 1 week time frame. So that I will see what is going on the 1 week time frame. I want to have a bigger picture of what is going on the higher time frame. The higher time frame is like the father. The lower time frame is like what? The son. If the father says you should sell, that means the higher time frame says you should sell. And the son, which is the lower time frame, says you should buy. Who should you respect the more? Is the father. So the father is the one that affects what the decisions of the son. That is to say, the higher time frame determines the decision of the lower time frame. So if you look at this higher time frame now, this is 1 week time frame. So this is 1 week. I have made the trend lines of the 1 week time frame to be purple. So this is a low, this side is a low. Then this side too is also a low. So you can see the highs and lows there. So now you need to mark your highs, mark your lows to know whether it's a downtrend or an uptrend. So now just use this now here. Then you measure it like this. So this tip here compared to the next low, I think that the low got higher, right? So let's see this high this side. The high this side is high, but are you seeing the high here? The high here is high, but when it now comes to the next high here, it became lower, equal. So from here throughout is just more of like ranging. From here throughout is ranging. That means the highs is more of ranging, while the lows are getting what? Higher. So if it's me, I will classify this as what? A ranging market. So this is how I'll draw it instead. So I'll draw it like this. Then this one is, the upside is going straight, horizontal, while the downside is going up. You can see how it is. So this side is going horizontal, while this side is going as if it's diagonal. So it just came from outside here, range inside here, just scattered inside here, came down here, then it came down here, it came up, came down, touch here again. The reason why I used to draw it so that it is easier to explain when you draw it out, right? You can, let me now delete all these highs. So it's currently here, just ranging here. So it's currently here, just ranging here. So if you notice what happened, it came from the high. So this is the high, this is the high. It went down to what? The low. Went back up to the high. Behave as if it was going down, reverse back to the high. Behave as if it was going down, reverse back to the high. Then now went down to the low. Then now went back to the what? High. So these lows are called the what? Support. Why these highs are called what? The resistance. Are you seeing it? So now let me explain something that you need to understand. So this is what they call consolidation. So let me explain something that you need to understand. Now, in a consolidation, when the trade goes down and it goes up, it goes down. This is 1 week, right? And it goes up, it goes down, and it goes up. If it's here, what should you be expecting? You'll be expecting it to do what? Start going what? Down. That is, this is the low to the high, back to the low, to the high, back to the low, to the high. So if it's in the high, you are expecting it to start going down to the low. So the higher time frame gives you the direction of the market, while the lower time frame gives you the entry and the exit, right? The higher time frame will tell you exactly where it is going towards, while the lower time frame will tell you exactly where to enter. Take note of that. Now, there's something I need to explain, break down. Look at, when it moves from the high to the low, it's called what? A pullback. When it moves from the high to the low, it's called a pullback. Now, when it moves from the low to the high, it's called a bounce. I believe you understand that. So, it moves from the high to the low, which is what? Pullback. From the low to the high, which is what? A bounce. From the high to the low, which is what? Pullback. From the low to the high, which is what? Bounce. So, it was pulling back and was bouncing, right? What they call pullback, bounce, pullback, bounce, pullback, bounce. Now, from the high to the low in 1 week, this is 1 week time frame. From the high to the low in 1 week time frame is what? A pullback. So this is what they call a pullback in the what? 1 week time frame. So this is a pullback. This is a pullback from the high to the low in the 1 week time frame. But this pullback now, if you come to the 1 day time frame now, if you come down to the 1 day time frame now, just this pullback from the high to the low in the 1 week time frame, this how is going to be looking. Let me draw it like this. Just this pullback from high to low in this 1 day time frame. Look at it here, 1 day time frame. You're going to see it's going to come like this, 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 come like this. So can you see? This is the high of the 1 week time frame, and this is the low of the 1 week time frame. So this is the high of the 1 week time frame. This is the low. So this is the high of the 1 week time frame, and this is the low of the 1 week time frame. But this pullback from year to year, from the high to the low, this pullback is called a pullback in the 1 week time frame. But on the 1 day time frame, look at the pullback. The same pullback is actually a downtrend going down. Now, as it reverses from this pullback to a bounce, it reverses from a pullback to a bounce, started going up. So as it's going up now, it's a bounce from the low to the high. That means it's bouncing from what? The low to the high. That is a bounce in the 1 week time frame. But coming to the 1 day time frame, look at what this is now. It will now become what? An uptrend. I see. You can see that from the low to the high was a bounce in the 1 week time frame. But this is 1 day time frame. This is 1 day time frame. But this 1 day time frame from the low of the 1 week to the high of the 1 week in the 1 day time frame is actually more of like moving like an uptrend, right? An uptrend, right? An uptrend. I seen it. Now, it now pulls back from the high to the low in the 1 week time frame. So when it got to the high of the 1 week time frame, what happens? It pulls back. Where is it pulling back to? To the low. So when you now look at the 1 day time frame now, this is going to be looking on the 1 day time frame. So why on the 1 week time frame is pulling back from the high to the low? On this 1 day time frame here, inside here now, is a downtrend, right? It's a downtrend. I seen it. It's a downtrend. So from year to year, it's a pullback from the high to the low. But on the lower time frame, it's actually a downtrend. Up, down, up, down, up, down. It's a downtrend. Then they bounce from the low to the high in the 1 week time frame. In the 1 day time frame, it's actually an uptrend. So when it reaches, so it will be an uptrend. Oh, it will be an uptrend. Then when it reaches the high of the 1 week time frame, you can see the high here, this high. When it reaches the high here, look at the high here. What happens? The uptrend of the 1 day time frame reverses to what? A downtrend. So you can see that this 1 day will keep being an uptrend until it gets to the high of the 1 week time frame. You can see it. It will be moving up until it gets to the high before reversing. So in the 1 day time frame, it's an uptrend until it gets to what? The high of the 1 week time frame. It will now reverse. Look at it. It reverses from the high back to the low. So the 1 day time frame reversed from an uptrend to a downtrend. But if you don't know, let's say you are trading 1 day time frame, it's an uptrend. You are buying, making money. Why before the 1 day time frame was an uptrend, but suddenly the 1 day time frame is now a downtrend? Why? Because you don't know that here is a high and here is a high, here is a low and here is a low. So when it goes to the high, it reverses to the low. But when you are looking at the 1 day time frame, it's just going up and you're just buying, making money. When you now got here, you don't know that something is going to make it to reverse from an uptrend to what? A downtrend. You don't know because you don't check the higher time frame. That is why it's important to check the higher time frame. So what happened? Started moving from the what? High to what? The low. Right? Now, look at it. Now move from the low back to the high in the 1 week time frame. So it's moving from the low to the high in the 1 week time frame. So this is the high this side here now. So when you now look at it again, so it's just moving from the low to the high in 1 week time frame. So in 1 day time frame, it will be an uptrend, right? It will be an uptrend like this now, an uptrend. When it now gets here, what happens? It will now start reversing to what? You can see when it got here, to start doing what? When it start going down. That means this is the 1 week time frame going down, right? So the same thing will happen here again. The same thing will happen here again. So when it got here, what happened? It will start reversing what? To a downtrend. Are you seeing how in this 1 day time frame, it's like a downtrend, uptrend, downtrend, uptrend, downtrend. But in the 1 week time frame, it's just a pullback, a bounce, a pullback, a bounce, a pullback, a bounce. Now, in this 1 day time frame, this is a downtrend. As it's going down, it's a downtrend. So this pullback in the 1 day time frame, it goes down, it pulls back, it goes down, it pulls back, it goes down, it pulls back. That downward movement and a pullback, downward movement and a pullback, downward movement and a pullback is called what? A downtrend, right? But the downward movement alone in the 1 day time frame is a bounce. But when you now go down to the 4-hour time frame, it's a downtrend. Then they pull back. That means as it's moving from here now back to here, it's just a pullback in the 1 day time frame. But when you now go down to the 4-hour time frame, it's an uptrend. Are you seeing how it works? So you need to understand what is happening from the higher time frame so that you are going to have a clearer picture of. So look at it here. Higher time frame gives you the direction of the market. Higher time frame does what? Gives you the direction of the market. While lower time frame gives you the entry. So now let's do something now. Let me say that this is, look at something now. Let's say that this is 1 week time frame now. This is 1 week time frame now. Let's say that this is 1 week time frame now. I see. So this is a high, this is a low, this is a high, this is a low, this is a high, this is a low. So these lows are called what? The support. This high are called what? The resistance. Right? Now, this is called resistance because as it's going up, look at here. The highs, these highs are called resistance because as it's going up, the resistance will prevent it from going up the more. To start going down. Then this support, the downside, will prevent it from going down the more. Start going up. So as it's going up, resistance will make it to go down. As it's going down, support will make it to go up. As it's going up, resistance will make it to go down. As it's going down, support will make it to go up. So you need to understand that. Now, look at what is going on here now. This is the 1 week time frame. 1 week time frame is, that means the 1 week time frame is a higher time frame now. Now look at the 1 day time frame. This is the 1 week time frame, which is the bigger picture. Now look at the 1 day time frame, which is the smaller picture now. Look at what happened now. It moved from the high. Look at it, just behaves like this. It comes here. I see this is the 1 day. Look at this is the 1 day, right? Look at what happened. This 1 week time frame was actually, look at 1 week time frame is going down. Look at it. Let me use an arrow. So 1 week time frame is actually 1 week time frame is going down. I see. So 1 week time frame is going down. So the red one is the 1 week time frame showing that it's going down. Now look at the 1 day time frame inside. It came down like this. It pulls back. Now look at, as it pulls back, look at here. I see in this level, it reaches here, pulls back. This is the 1 day time frame inside the 1 week time frame. Now when it got here, what happened? It reverses. Remember this level, then it broke this level. So as it broke this level, this break, as it broke this level, this break is called what? Break of structure, right? So it comes down, right? It comes down, then it pulls back. As it pulls back, look at this level again, right? It comes again. It breaks this level. It broke it here. This is what they call break of what? Structure. So whenever this is the low, right? This is the high. This is the low, right? This is the high. So whenever it breaks the low, it's called break of structure. In a downtrend, whenever it breaks the low in a downtrend, it's called what? Break of structure. So this is the low. This is the low. So whenever it breaks the low, it's called what? Break of structure. Now it got here, right? Now it got here. Take note of this level. Now as it got here, which is, look at this trend line now is the support of the 1 week time frame. So when the 1 day time frame got to the trend line, which is the support of the 1 week time frame, it went back like this. It came down a little. Look at this high. This is a high, right? So this is a high. This is a low, right? This is a high. So this is a high. This is a low. This is a high. This is what? A low. Now look at what happened. So these lows in a downtrend, whenever it breaks it, it's called break of structure. This is a low. Whenever it breaks the low, it's called break of structure. This is a low. Look at what happened. It came here. Look at the low. It did not break the low. Look at the high here. So when it came back like this, it reversed, broke the high. I see. So whenever the high is broken in a downtrend, whenever the high is broken in a downtrend, it's called what? Change of character. Is it clear? So when it goes, look at it here. When it goes down, it goes up. This is the low. This low is having a level like this. Let me use the red pen. This low is having a level like this, right? Now it reverses. So this is a high. As it broke this level and went down, it's called what? Break of structure. It reverses, right? As it reverses, this is a low. So take note of this low. Look at this low now. Are you seeing this low? Now This is a downtrend, though. This is a downtrend. So as it came now, it broke this structure, came down. So as it broke this structure, it's called break of what? Structure. This is a high. So as it reverses, this is a low. It came here. This is what? A high. Now take note of this level. Now what happened? It now came down. As it broke here, this is what they call break of what? Structure. Right? It came down. It reverses. This is a low. So this side are a low. So this is a what? A downtrend because it's going down. So in a downtrend, when the lows are broken, it's called break of structure. But what if the high is broken? If the high is broken, it's called change of character. So as it went, this is a low. Okay, now this is the downtrend now. The downtrend is facing down. Now just watch what happened. Watch what happened now. It came here. Right? It came here. It came here. It has broken the previous low. That is not the problem. Now look at this high. Look at this high now. It now broke this high. I see it has broken this high. As it broke this high, this is what they call change of character. So we now reverse. Now this is, as it reverse, this is now what? A low. This is a high. So this high is having this level. It broke this high. This is what they call break of structure. It reverses. Now this is a high. It comes up again. Look at this level. Now this is a low. As it broke this level, it's called what? Break of structure. It came up, reverses. This is a high. As it comes down here, this is a low. Then as it goes up, it breaks this level. This is what they call break of structure. I seen highs changing from, I seen how it changed around here. So change of character will change it from a downtrend to an uptrend, while break of structure will make it to continue in a downtrend. So now as it got here, down here now, what then happened? It broke here, which is what? Change of character. It now came up, touched here again. Now it changed from what? A downtrend to an what? To an uptrend, towards what? The high of the, so the weekly time frame is now facing up. I seen now it came up again. Look at this level. It broke that level. That's what they call break of structure. It came up. Then as it came up, this is a high. It came back down. This is a low. So in this high, take note of this high. Take note of this high. So now, as it came back up, as it broke this high, it's called what? Break of structure. Now it came up and touched this high in the higher time frame. And what then happened? It reverses. So when it breaks the high in an uptrend, when it breaks the high in an uptrend, it's called break of structure. Right? When it breaks the low in an uptrend, it's called change of character. So now this is the low. So it broke the high in an uptrend. So this is what they call break of structure. Now it came down. This is the level of the low here. Now it came down, broke this low. As it broke this low, it's called what? Change of what? Character. I seen. Then after breaking the low, it reverses. Then it started coming down. I seen it. So these are the basic things that you need to understand, that the higher time frame makes the lower time frame to reverse. What? Hope you understand. So when the lower time frame is going in an uptrend, going up, the lower time frame is going up. When the lower time frame is going up, once it gets to the resistance of the higher time frame, it will reverse and start going down. But when you don't know, you will keep on buying because it's going up. But when it starts going down because it has gotten to the resistance of the higher time frame, you start losing because you don't know. That's why it's good for you to check the higher time frame. It's good for you to check the higher time frame. So now, let me explain this in a better way now. When it goes down and reverses, this is a low. Now, look at this level. Are you seeing this level now? As it reverses like this is a high, right? This level is a high, this level is a low. As it broke this level, that means this level is the low level. As it broke, this is a downtrend, this is a downtrend. As it broke this level in a downtrend, right? It's called what? BOS, meaning what? Break of structure. So in a downtrend, when the low is broken in a downtrend, it's called break of structure. Now, it came down, it reverses, this is a low. It comes up, it reverses, this is a high. So you can see high. Now, take note of this low. Take note of this low. Now, as it goes down, touches here, this is the level of the low. It broke the low. This is what they call break of structure. Right? It goes down. It reverses. This is a low. It comes here. It reverses. This is a high. Are you seeing it? Take note of the level of the low. Right? Now, it came here to this low. It broke the low. It's called what? Break of structure. So it came here. It reverses. This is a low. It came here. It reverses. This is a high. Take note of this level. As it got to this level, it broke this level. This is what they call break of what? Structure. Now, this is 1 day time frame. This is 1 day time frame. So the 1 day time frame is what? A downtrend. But if you go up, you notice that this level here like this, in the 1 week time frame, this level here in the 1 week time frame is what? The resistance, right? Which is what? The high. And if you go down, you notice that this level is what? The support, which is what? The low. So now, but in the 1 day time frame is going down. Now, when it went down, it got here, it reverses. So this low is a low in the 1 day time frame, and at the same time, the low in the 1 week time frame. So it's a low in the 1 day time frame because it's going down, and this is the low in the one. So this is the low in the 1 day time frame, and this 1 day time frame low is the same low of the 1 week time frame. So look at how the 1 week time frame will affect the 1 day time frame. We influence the 1 day time frame. So now as it got, it reverses. This is the high. Instead of it to come and break this low, look at what then happened. Look at this. Look at the level of this high. Look at the level of this low. Normally, it's supposed to break the low, right? But because of this higher time frame bias, higher time frame is no longer, because higher time frame has moved from what? The resistance to the support. So the higher time frame is going to be moving from what? The support to the resistance. So when you check what is happening in the higher time frame, you know that this thing will start going what? Up. So as it came up like this, it reverses. Now, instead of it to break the low, it went up and broke the high. Can you imagine? So it broke the high here. So this was the high. It broke the high here. As it broke the high, it reversed. So this break of the high is what they call change of character. So when the high is broken in a downtrend, it's called change of character. But when the low is broken in a downtrend, it's called break of structure. I will repeat. When the low is broken in a downtrend, it's called break of structure. But when the high is broken in a downtrend, it's called change of character. Now, so as it broke it, it came back. Now remember that this is the high, right? So now this is another high. Now a new high is formed here, right? This is, as it reverses, this is the low. So remember that there is a high here. Now the low went up, broke this level. As it broke this level, it's called what? A break of structure. It went up. As it reverses, it's called what? a high, it came down, it reverses a low. See this level now. I seen that level. It came up here, broke this level, came out. This is what they call break of what? Structure. Right? It now came up, reverse, this what? A high. Came back down, reverse, this a low. Take note of this structure, this level. Now, as it came up, it broke this level. As it broke it, it's called what? At this level, it's called what? Break of structure. As it came up, it reversed like this. This is what a high. As it came here, it reversed. This is what they call a low. So take note of this level. It came up here, it broke this level, break of what? Structure. Now look at what happened. It came up here, it touched this level. This is what they call a high. So this high is the high of the 1 day time frame. At the same time, this high is the high of the 1 week time frame. So look at what's happened now. As it came down, this is what? The low. So instead of it to go up and break the high, it stopped breaking the high. And look at what happened. Look at the low. Look at the level of the low here. Look at the level of the high. Instead of it to go and break the high as usual, look at what happened. It came back, broke the low. So this break of the low is what they call change of what? Character. So in an uptrend, when the high is broken, it's called break of structure. In an uptrend, when the high is broken, it's called break of structure. In an uptrend, when the low is broken, it's called change of character. Look at this is an uptrend. As it's going up, it's an uptrend. This is a high. When this high is broken here, it's called break of structure. So break of structure means that the trend continues. Break of structure means that the trend continues, right? It continues uptrend. So as it broke this high, it continues uptrend. So break of structure means it continues uptrend. As it broke the high, it continues uptrend. Now look at this low. Look at this low here. Instead of it to come and break this high here, it reverses, broke this low. So it leads to what they call change of character. So break of structure means that it continues the uptrend. But change of character, break of structure means it continues the uptrend. Break of structure means it continues the uptrend. While change of character means it changes from an uptrend to maybe a downtrend or a consolidation, right? But let's say a downtrend. So look at what happened. It now changed from an uptrend, started doing what? Started going down. So in this downtrend, look at the downtrend here. In this downtrend here, when this low is broken, it's called break of structure. So when the low is broken, it's called break of structure. So as this low is broken here, it's called break of structure. So break of structure makes the trend to continue a downtrend. Now it comes again. This low, it broke this low. Break of structure means that the trend will continue. That means the downtrend will continue. So when the low is broken on a downtrend, it's called break of structure. When the high is broken on a downtrend, it's called change of character. But in an uptrend, when the high is broken, it's called break of structure. But when the low is broken in an uptrend, it's called change of character. So in a downtrend, look at this downtrend now. In a downtrend, when this low is broken, it's called break of structure because the trend continues a downtrend. Look at this low. The low was broken, means break of structure. Break of structure makes the trend to continue a downtrend. Break of structure means the trend continues in a downtrend. Now look at this high. It broke the high instead of breaking the low. It broke the high. So as it broke the high, it's called change of character. So change of character means that it now reverses from a downtrend to what? An uptrend. Now this is the high. It broke the high. Uptrend. It broke the high. What is that? Break of structure. So break of structure means that it continues in an uptrend. It broke the high again, which is what? Break of structure. So break of structure means that the trend will continue in an uptrend. One thing about forex trading is that you need to learn the strategy, understand it very well, understand why. Okay, understand the logic behind why you should enter here. Understand the logic behind why your stop loss should be here. Understand the logic behind why your take profit should be here. And understand the logic behind why your wins will be more than your losses. Don't just do copy and paste in forex trading. You need to have what they call experiential and knowledge understanding of your strategy. So you need what they call a strategy edge, and you need what they call the trader's edge. Strategy edge is the strategy. Trader's edge is the trader's experience of that strategy, personal experience. So thank you very much for watching this video. If you find this video interesting, please like and subscribe. Share this video to your friends that are into forex trading or want to learn forex trading so that they can learn a lot. In this channel, I don't show you Lamborghinis, I don't show you cars. What I show you is the charts. My focus here is for you to learn what works, not hypes, not vibes. Just teach you what you should know. You go and implement. So if you want to learn forex trading, I will leave a recommended link in the description of this video or in the pinned comment, or check it in my bio if you are watching from Facebook or Instagram. Click it and learn how to trade forex. It's a course that will teach you how to trade forex, right? I recommend that course for all of you. Thank you very much for watching this video, and if you have not watched, I want you to watch more videos on how I'm analyzing, because don't just watch only one analysis and you go with it. Watch different analysis, watch different currency pairs, watch them. As you are watching them, see me buy, see me sell, see me make analysis before buying, see me make analysis before selling. As you are seeing all those things, you are now learning. From there, you gain your own experience, and what? You start making money from forex. So watch this video where I analyze my chart before making an entry. So thank you very much for watching this video, and I will see you in this next video popping on the screen. Bye for now.